Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday morning pre-market webcast. Okay, so daily chart and what we saw yesterday, we saw a move. Yesterday's low was at 27. They actually did matching lows just right around the open there, 26.32 half. The bulls took the horns and ran with it. Got it up as high as 2,700 in the regular session yesterday. They progressed and followed through as high as 27.19 half in the overnight. So, look, you've got a situation now where you have a high at 27.2675 that should get challenged today. And if it's broken, then it should head up and deal with the daily midband up around 27.52. So this is what happens when you create a double bottom, 25.30, and two looks at the 200-day that hold, and then you get some follow through. And this is one of two things. It's either a multi-day bear market type rally that can go as high as the daily midband and fail and still, leave us in what has been a downtrending market since the high at 78.5 on January the 29th, or you will see them push through, convert the daily midband to support, turn this market into officially a buy dips market. It's a buy dips market right now, but on a longer term time frame, then, if they take the daily midband back, then it is. And at that point, we start looking at a slow progression back up towards the all-time high. The bears have very few chances from here to turn the ship around. They really, really had a chance yesterday to convert the weekly pivot. Let's take a look at the hourly chart. To convert the weekly pivot and at least get things back towards 2,600. They dropped the ball and they paid the price. So we had these tight bands for a few days. It was a head fake down to a band right up that the bulls have taken advantage of in the overnight. So you can see the pushback to the hourly midband rather, that is held. You can see the hourly band starting to tighten up again. If this follows the pattern from late 2017, you'll see the hourly bands get tight, expand up, tight, expand up. The bears desperately have to break that pattern. Really, the only way they can truly break that pattern is to turn the hourly midband into resistance and start taking out levels that matter, starting with the round number at 2,700. You've got a lot of ground to try to get back if you're the bears. And my feeling is when the market gets into this kind of pattern, it falls right back into its old habits. And if it's going to fall back into its old habits, then we as traders have to fall back into our whole old habits as well and just buy dips. Buy dips until it stops working. We did 48 handles yesterday. And did we short it ever? We didn't short it on the economic news down. I was flat, and you can't chase that sucker. You want to talk about a bear trap? Refer yourself to 26.32 half at 9:32 in the morning, and you will know what a bear trap looks like. Take a picture of that, because people throw that term around a lot, bull trap, bear trap. The economic reaction yesterday was an absolute Encyclopedia Britannica version of a bear trap. So we tried one short at 41.5 that we got paid on. And at that point, from 44.5 and beyond, all longs, all day, it was a day to be long. It was a trend day that kept on giving. So you've got to go with the flow. If you fought it short yesterday, if you fought price, you didn't have a good day. And if you find yourself just saying to yourself, the bears have to prevail, I'm fighting price, come and see us. Come and see us. Come and be with a group of traders that, we're very objective. We don't care if it goes up. We don't care if it goes down. We just want it to move. And we want to be on the side that it's moving in the direction of, because that's more fun than fighting price. So maybe the bears get it together today. They're not going to get it together as long as we're above the hourly midband. They're not going to get it together as long as we're above 2,700. Some of these areas need to crack. They need to crack. And I personally will not be taking them all that seriously until they get below today's daily pivot, which is down at 74. if we get a push down today, you had support in the overnight at 2704, 2700. You see 2706 essentially is the mid-band here. So 2700 to 2706 on a quick move down off the open, if that holds and then you get up and over that 19, you're looking at another long day for the bears. All right, everybody have a good one. We'll be out with some midday and wrap-up stuff on Twitter and Instagram. We'll talk to everybody then. Trade them well. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.